Hey everybody, Chuck Barone. Thursday, May the 4th, 2023, a momentous day, guys. A lot of stuff today coming in. We have a lot of stuff to talk about, so don't let me dilly-dally around. As always, though, we want to welcome everybody to the show. It's going to be a good one today. Thank you guys for watching the videos. We appreciate it. Let's get right into this stuff. Stock market today, not a good day, guys. Ugh, another down day. Dow Jones falling 286 points. The Dow is now negative for the year. Yikes. The index sitting at 33,129 or 127, sorry. The S&P falls 29 points today, 4,061. NASDAQ down 58 points, falling under 14,000, 13,966. Not a great day for the market, not a lot of very positive news. Surprisingly, because earnings are still holding up for a lot of companies, margins certainly, but not good. Some of these numbers, astounding numbers, you know, regionals getting cracked today. Pacific West down 50%. Western Alliance down 35%. Zion's Bank down 11%. This is all in one day, man. These are incredible numbers. This is like, guys, let's get the message here, right? We've been telling you guys to be defensive for a very long time on this show since day one. Now, more than ever, okay? Be very careful, guys. Be very careful. Protect your money right now. Smaller gains or no gain, better than losses or big losses. And look at these numbers. People were holding these shares today. People got crunched, man, beat up in the bond market. Crazy bond market, right? So we've been watching rates were ticking up. Wow, now plummeting back down. The market completely disregarding the Federal Reserve, completely disregarding yesterday's rate increase, completely disregarding any forward guidance from the Fed, anything that they're saying, pricing in rate cuts. As a result, boom, look at this bond market today. The 10-year down 5 basis points, sitting at 3.35%. The 2-year down 18 basis points, 3.76. You know, this 2-year was 4.15 on Monday, okay? Guys, moves like this in the market, very unusual, not a sign of stability. All of the, well, we're going to get into some commentary here, but all of this really ominous signs, right? Now, dollar, nothing in the dollar. Up very small today, 101.40 on the index. Kind of seems to be its comfort zone. Would have been up probably a little more today. European Bank, Central Bank, raising their rate a quarter a point, taking a little strength out, starch out of the dollar. Metals today. Wow, guys, look at these numbers, man. Another nice day for gold and silver. Gold up $10.90, $2,050.50 per ounce. A great rally for gold, man. Look at that, $2,050. Silver, boom, up 45 cents, 26.03. So now crunch these numbers. Look at this. Gold not only was kind of struggling to get above 2,000. Was actually at 2,085 overnight, looking to be, again, it's with the dollar, regional banks, all kind of crazy stuff, Federal Reserve, debt default, super attractive metals. The run is on, guys. For all I know, a lot of you guys watching this show are holding gold and silver, physical metals. Thank you, Greg. A lot of you guys holding, you know, funds or whatever, invested in the market one way or the other, in the actual metals, not mining as much, right, guys? But these metals, man, this market run is on. Any good news, you're going to see big jumps like this. And by the time it's done, you're going to see all-time highs, I'm guessing. I don't know about silver, if it'll get to, you know, back in the 80s, the hunt days of around 80 bucks an ounce. It won't get that high, I don't think, not this time. But big numbers and good stuff coming for holders and investors in gold and silver. Oil up today, very small. Up a nickel per barrel, $68. 65 cents per barrel of West Texas Intermediate, right where we've been telling you guys, right in that trough between 65 and 70. It seems like that's kind of the comforting comfort zone right now for oil prices. I still say the trend in oil is down. We'll see where that goes. If the recession that I see coming comes, it certainly will be down. Bitcoin today up $513, 28,867. I was reading an interesting article in Forbes today talking about Bitcoin and some other cryptos looking like they're getting set for a run, talking about Bitcoin up to 35,000 like soon. I'm going to finish reading that up, write a little bit, some notes, and talk about that tomorrow. Okay, news today, big stuff, guys, lots of stuff to talk about. Unemployment was the one we were looking for, first thing coming out. Claims coming in, 242,000 versus 240,000 expected, up from, I think it was 238 last week. So up just small, but, just was a short time ago. These numbers were under 200,000. So unemployment picking up a little bit, exactly what the Fed wants. Also getting some other data today on worker productivity dropping more than expected. You got labor costs rising faster than expected. So the Fed kind of having its way as far as pushing the economy into recession. We've talked about it a long time. I've said it many, many times to you guys, and I'm sure the regular listeners are going to get sick of hearing this, but the actual raising of interest rates the Federal Reserve does not lower prices or cause inflation to go away. The raising of rates typically causes a recession, in some cases a pretty deep recession, and that in turn, the lack of demand brings prices down, brings inflation, especially rising prices, right? Companies have to struggle to hold the prices. You start to see deflation. Well, that's another topic. But anyway, so the Fed having its way with their rate increases working as far as slowing the economy down, slowing down jobs. But now at the same time, you have worker productivity falling. Worker productivity falls 2.7% first quarter. They were expecting 1.8%. Not good, man. Okay. What happens is when worker productivity falls, even if their wages and their basic labor cost for that productivity stays the same, it actually costs more because the productivity is falling. You follow me? So unit labor costs jumping 6.3% versus up 3.3% last quarter. That's a big number for a quarter. 6.3%. Now, that's not all reflected in wages. Some of that is the cost of insurances and other benefits going up. But nonetheless, the cost of hiring and the cost of retaining employees going up, the productivity of those employees going down. Of course, more and more layoffs being announced, right? So if you look at all of this added up together, guys, okay, and this is kind of what I feel like my job is to steer you guys clear of any of the ditches that are in the road, right? But let's add all this stuff up. Okay, so you got the Federal Reserve wants to engineer a recession, and one of the oldest sayings on Wall Street is, don't fight the Fed. So they're going to have their recession. And signs right now of recession coming out, popping up everywhere. If you look at it, we've had this yield curve inversion for a long, long time now, over a year. We've had slowing sales everywhere. Companies reporting, even though because margins are up, the numbers are okay, but the actual sales they're making coming down, manufacturing coming down, car sales coming down, real estate struggling, investors at the end of their rope as far as borrowing money, people buying groceries on buy now, pay later deals. You just got everything just pointing toward a horrible time in the economy. Massive debt loads for poor consumers, struggling to make payments. The payments on everything going up, rents, just the cost of living just destroying the middle class right now. And at the same time, prices stubbornly high. Now they brought it down from 9, which it peaked out at. Now nobody expected that to kind of stay there, although people will argue the real inflation is much higher, right? But if you look at this, I need the peepers, I made notes. Labor costs staying high as evidenced. right? Prices not coming down, even going up still on some stuff. You look at gas. Look at my house, where they're raising my power bill basically 33%. They're raising my gas bill 30%. Even though the price of natural gas is cratered out, they want to charge us like it's still peaked out, right? You got everything is just a gigantic upside down where it shouldn't be. And don't forget this one, guys, okay? One of the biggest causes of this inflation, one of the biggest contributors to this inflation is greedy freaking corporations, man. Greedflation. It's just as simple as that. You know, they're going to deny that because they're our wonderful job creators. But if you look at their numbers, okay, look at their profits, look at their margins in the face of recession, especially these oil companies, right? Out of line. Highest profit margins in 70 years, really? Okay? If you look at these companies, corporate now, let's face it, you know how I feel, and I've been talking about it a long time. A lot of people in this country want to get mad at the politicians, and I understand that because they're the face, right? They're the ones who are on TV talking, allegedly creating the laws. The truth is, these corporate overlords are the bosses, man. The politicians are nothing more than paid mouthpieces for their corporate benefactors, right? Or their moneyed benefactors, whatever it is. So if you look at these corporations, highest profit margins in 70 years, gigantic bonuses, massive pay to the top of the line. Hello, Google. $226 million to one guy. At a place where the median price is $280, or the median wage is $280,000, they're paying one guy more than 800 workers. Now, I'll tell you what, guys. I don't care what the business is, whether it's Google, Charlie's landscaping business, or car wash, or whatever, okay? You give me 800 guys that I can pay $280,000 a year to, and I will outproduce any single person on this planet, no matter what the competition is. The idea that one person could possibly be in any way, shape, or form worth 800, I would like to hear an argument on why. Because it just seems like an absurdity to me. Then you add on top of that trillions and trillions of dollars in stock buybacks, because that really helps the company. That really helps, the production. That helps, the company be more profitable. No, what it does is it helps the shareholders, man. It helps the bosses because the stock prices go higher. So the bosses get bigger wages. They get bigger bonuses. They get their cash, their options in. I mean, can we say it what it really is here now, guys? Okay. Stock buybacks used to be illegal. Did you know that? Not that long ago, before Reagan was elected. Okay? They thought it was manipulating the stocks, and it is, okay? But at the same time as we know all this crazy is going on, they're going to blame it on labor. It's those damn workers. They talk like $15 an hour is some kind of wage that is just going to break the back of the corporate world. Really? $600 a week? Who can live on $600 a week? That's gross. Before taxes, before insurance, before any savings for 401k. Insurance? Really? So this is just, everything's upside down. And I'm not Charlie the commie here, okay? I'm for getting rich as much as anybody else. But when you get to decide your own pay, okay, and here's this pile of cash, and you can distribute this pile of cash any way you see fit, who's shocked that this giant piece of it stays for him? Who's shocked by that? I mean, it's just the levels of greed now are outrageous, and now they're hurting everybody but that certain top echelon, man. So now you guys need to know this. Get out of the game, man. Stay out of debt. That's where they want you. They want you on the payment plan, man. Now, how many of you guys listening to this show have ever got your pay, and by the time you were done writing out all your bills for that pay period, now you're like, oh crap, how am I going to live on that? I remember times in my life like that. That's where they want everybody to be. Everybody screaming for relief. More people on food stamps. Student loans, people can't pay them. More levels of credit card debt. Watch and see. You're going to see bankruptcies and defaults go through the roof. I was reading an article today to cap and finish this. Harley Davidson complaining they can't find enough people to repo Harleys because regular repo guys don't really want to do it. Hell, I wouldn't either. I mean, would you rather repo Karen's Toyota Corolla or Butch's Harley? I mean, you're probably going to get a lot more resistance from Butch, right? So yeah, I mean, people are now, they're repoing Harleys. This tells you where we're at in our world. Guys, like I said, you look at what's happening now, banks, look at these banks today. And we're going to talk about this a little bit more tomorrow because my timer is telling me I'm gas bagging and wind bagging you guys, but big important stuff going on right now, guys. We need to take heed. Time to really hunker down, man. The storm now. This is not like last year. Well, the recession looks like it, as evidenced by 2 negative quarters. This one, you can see the tornado starting to form under the clouds here. Okay? When you're seeing bank stocks go down 50%, the bigs are going to come in. Nobody's worried about this because they figure JP Morgan or Bank of America, they're going to come in and swoop these up, and they will. But there's only so much appetite for that, guys. And it won't be long before now they start getting in trouble if the trend continues. Or we end up with just 4 banks across the country. Anyway, sorry for the rant. I just see really, really bad things coming for working people, man. The rich are going to be happy. The poor are going to still be poor. And the rest of us are going to be poorer unless we take serious defensive action. We'll be back tomorrow, guys. We appreciate your support. Sorry for the big neg fest, but what a day, man. Tomorrow we'll try to tie everything up, give you guys a little bit of strategy about where we should be going. Also, take a look at the website. No change to the investment portfolio. Plug the numbers in, telling me to stand pat. Even though the portfolio is up a little bit for the month, nothing dramatic. Have a look at it, and we'll be back to that the first of next month. We'll be back to you guys tomorrow to wrap this week up. We're going to we'll finish up the week with some data. We'll try and tie it all together. But I'm telling you guys, we got stagflation coming. Crappy economy with inflation going to be here. Write it down. I'm telling you it's going to happen. Take due notice, man. Protect yourselves. See you tomorrow. Thanks.